All right, so the morning briefing is designed to teach you guys how to prepare for your morning and kind of put something together for yourselves like this. I tend to remind people from time to time that this is the purpose of the morning briefing because we're doing it really early in the morning. You're going to want to try to repeat these steps as we get closer to the bell. So many things can change between 7:30 when I'm doing this morning briefing and 9:30 when the bell rings, right? So the idea is we kind of walk through these steps. I show you the same thing every day. We go through the same process every day because I'm trying to teach you how to do this for yourselves. Along the way, when you're making your own morning routine, it doesn't necessarily need to do exactly the things that I do. It needs to be tailored to your style. If you're a penny trader, or maybe you just only trade futures, or you only trade stock, you're going to want to take some of these and adapt it and turn it to a style that fits you better. First thing I want to do in the morning is check out what happened in the overnight hours. Generally, I scroll back to find the market wrap for Asia and then find the market wrap for Europe. This usually fills me in on what sectors were moving, if there was any news in the overnight hours that I want to pay attention to that I think might bleed over into today. Things like anything to do with currency pairs, any central bank or rate decisions, anything like that, anything to do with the bonds. This kind of stuff is what affects us going forward into our trading day. Finance Juice is one of my go-tos. It does help to have an account. You don't need to have a paid account. I've got an account here, it's free, but I am logged in on my account so that I can adjust the news settings, right? This thing gets news from all kinds of places, and I don't like all of its sources. MSNBC and places like that. I don't want that junk popping up into my news feed. So I just go in and turn those settings off because I have an account, right? So I would encourage you to make an account either here, or FX Street is another one that's reasonably decent. Koifin is another one reasonably decent. If you've got something like FinViz Pro, they've got an aggregate news service that does pretty good. But on Finance Juice, if there's anybody speaking today, any central bankers or anybody who's going to be coming out to talk that they know about, they put it in this list. And I really like that because I would struggle to find a consistent place to tell me who's going to be on the docket speaking today. And this does a really good job of that. Today's briefing is named retail sales, and that's what's on the docket for us today. And you can see, other than retail sales, it's a light schedule, right? There's just not really a whole lot there. And that's all right. So as I usually do, I show this screen. I always show this screen because if you're going to go and maybe you're looking at old intraday price action, right? From say last December, you found a price pattern and you want to know more about what was happening in that day's trading. You can come back and turn on the morning briefing for that day and see if there was any economic events that day, right? Um, when we're looking at old price action and I'm trying to figure out, how often does a pattern happen? Is this kind of price action something that I can expect again? We can't see that intraday price action and know whether or not there was an economic event that day. Like, how often does lunch fail because there is some kind of additional auction at 11 o'clock or 11:30? Knowing that I can turn on my morning briefing for that day, and within the first 10 minutes of the video, I can see this screen with what was on the docket. That helps, right? It helps be able to do research on back testing different days and events. The indexes are mean reverting. So if you trade the S&P and the NASDAQ, they they mean revert. Those days are just the same thing repeated again and again and again, right? You learn to recognize what those days look like, and they become a pattern of, just like a head and shoulders or a flag or a cup and handle. The kind of day that we have becomes a pattern itself. All right, as we do every day, assess the situation and discuss whether one of three things can happen. We stay in the range, we break out of the range to the upside, or we break out of the range to the downside. Pretty simple, right? Not a lot to the logic. The market can only do one of those three things. Well, it can do a combination of those three things. Right now, we're sitting inside of yesterday's price action. That is a very large zone. And so it would be easier to break that zone down into quadrants. The first quadrant would be from yesterday's high down to our own Globex low. And then from there, from the Globex low down to, say, the Globex low of yesterday. And then from that one down to the RTH low of yesterday. So three different zones, each giving us benchmarks, targets, everything that we would need to be able to play this through. You do really want to take the opportunity to lay those benchmarks out. Right? Even right now, the blue line there, 39.87, that's where we opened in Globex last night. The green line there is our own Globex low. It also lines up really close with the Globex high from yesterday. Orange line is the open from yesterday, and the red line is ADR half. The smaller red line is the low of yesterday. That ADR half lines up really close with the Globex low. And we could carry the cash open from Wednesday into today. That would give us a pivot point. And so laying out these benchmarks gives us targets to aim for, and then when we get there, a place to reassess, look for another opportunity. All of that, though, would still be a range. It would still be inside of yesterday's price action. So it would still be considered a range day. Range days, generally speaking, tend to be a little choppier. The price action isn't as clean. The trends aren't as uniform. So, it's definitely tradable. You just got to, kind of keep in mind the kind of price action you're going to see if you're inside of yesterday's range. Also, there are 4 unique specific trend days, and they don't exist inside of a previous day's range. So that's something to kind of keep in mind too. You can't have one of our 4 trend days if you're sitting inside of yesterday's price. The base case for today is that we remain inside of yesterday's price. I know I keep saying that. We're topped out, and for the most part, we're just maintaining this range. Sure, we popped up out of it last night or yesterday afternoon, and so far we're keeping it. We're close enough to FOMC that there are no Fed speakers out there chipping their teeth, kind of counting it down to the rate hike. And it seems like the current July rate hike has been settled and resolved. It's more about the September numbers at this point. And once we're done with July's numbers, there's really not a lot to focus on except earnings. And that's going to be the really big deal. It seems like everybody already lowered it down, and now they're getting beats that are just horrible. With a low bar beat, the market just enjoying it and ripping to the upside. All right, so range case, we've discussed that. Another scenario would be that we break out of the top like we did yesterday. We've got 4004 as yesterday's high. Beyond that, 4028. And beyond that, 4068. Now, the market maker move does exist today for the ES. So not only do we have a 2% ADR, we have a market maker move of 0.58, about a half of a percent. So the full ADR today, or the full anticipated distance that we could move, is not 2%, it's 2.5%. So from where we opened in the Globex, there's our 2%, our 2.5 would put us at 4088. And remember, that's a known number, 4088. If we get that far, it wouldn't even be considered unusual or extreme. We could get to 4088 and it would just be nothing, a shrug. It would have moved as far as we had expected it to move all along. So if today happens to be an extreme day, we're going to shoot right past 4088. And if you're thinking, gosh, that looks a long ways off, we just had a 3% move the other day. If you want to learn more about the market maker move, you can hit the TD Ameritrade's publicated website called the Ticker Tape. It's a really great publication. They did an amazing job. And you can search it for all kinds of different parts and pieces and features of Thinkorswim. It's been around for a long time. I think they got over 50 articles that discuss the market maker move in different ways, either ways that they are using it or what it does, what it was designed from, where the numbers come in at. And I've heard some really popular, well-known people talk about the market maker move and get it all wrong. Just completely, it's like they have no freaking clue what the heck it is. And they're just popping things off the top of their head. Obviously, they've never read one single article on what that thing is. So it's not like I'm some kind of know-it-all. I just read the article, right? I'm an informed user, because if you want to know what it is, go to the people that made the darn thing and read about it. Simple enough. Yeah. So MMM, you get all of these different articles to read. And I've had someone say, hey, dude, I don't want to read all that stuff. Great. Just read the one right here. What it is. What are they? It's only good for today. So when it disappears, it'll be because the numbers have changed and it no longer applies. We've talked about the range. We've talked about a topside breakout. Now we need to talk about a downside breakout. We would have to get below 39.30 first to have an inside day breakout to the downside, and that's past the ADR. The ADR half is at 39.47. Now I continue to get people asking, what's the ADR? It's the average daily range. It's very similar to an ATR, but an ATR is front weighted like an exponential moving average is front weighted. And the ADR is not front weighed, like a simple moving average is not front weighed, right? So from the close of last night, if we look at this 2% ADR and we split that 2% equally from the close and we go 1% one way and 1% the other way, combined, that is our 2%. But from the close, we could just go 2% in one direction or 2% in the other direction. And that would be a full ADR in a single direction. Mine is a 21 ADR, meaning I looked back 21 days and took the number from the highest point to the lowest point. So if we say that that was an $80 move, for an example, and then we look at the day before that and we take it from its highest point to its lowest point and say that was a $60 move, and then we go to the next day and we measure that one and it was a 120 point move from its highest to its lowest. We did that for 21 days over and over and over and over, added all of the 21 days together, got this really big number, and then divided it by 21. That's how you get average. Right? Basic math logic 101, how to get an average. A TR, on the other hand, would do something similar to this, and then it would front weigh it. And some ATRs use a high-low close multiple, so it kind of uses a more complex math, but it still gets it done. Since most brokers don't have ADR for you to use, just use the daily ATR. It's close enough. Set it to 21, go to your daily chart, write the number down. That's your daily ATR. So for a downside breakout, if we can get below the half ADR and below 39.30, we've got 39.20, this low from the other day, 39.22. And then we've got our full ADR at 39.07, which lines up really close with like Monday's high, really close. And there is a cog line in there at 39.11. All right, we're looking at the volume profile here, 10-day, 30 minutes. Volume profile is in green. TPO profile is in blue. Think of the blue one as how much time we spent at a particular price point, and the green as how much volume was transacted at that particular price point. So it's a look in time and volume when we put these two together. Out of the last 10 days, we've spent the most time at 39.53. We've got the most amount of volume at 38.57. Right now we're outside of the box, and we have some volume support at around 39.60. Just keep in mind that that support is like a minor support, right? It's an area where we would expect price to react. It's not going to be a support like it's just a very light support, right? Consider that if price was to come back down and get into 39.60, that it might get a first touch bounce, a temporary reprieve, a place to pause and consolidate. Because when we're reaching back and laying out pivot points and we match a high, say at 39.62, if I was just to snap a line there and say, oh yeah, that looks like a support level, or here at 39.75 and say, oh yeah, well, that looks like a support level. If I'm just using candles and I don't bring anything in to analyze those candles, then what's the difference between those and say down here at 39.30? Nothing, right? There's a wick here It was a tweezer bottom. Shouldn't I mark that one? And then, of course, that leaves us marking everything, right? And we just get a bunch of lines all over the place. So if we're going to mark out these pivot points, we want to at least be able to tie them to something. Large volume node, value area high, value area low, point of control, something. We are outside the box, and when we are outside of the box, we expect to come back into the box. There is no volume resistance to the upside, so if we happen to break above 40 to that 4,000 mark again, it's clear sailing volume-wise on this 30-minute. It's worth stepping out a little bit, though. If we go to the 20-day, 1 hour, we really don't have anything there either, right? We'd have to go back even farther than that, and going back farther than that wouldn't be useful or beneficial. We do have an untouched point of control from yesterday. $39.55. So the expectation is if we come back down and make contact with that point of control, there's very likely going to be a reaction in the market there. And you could carry forward the value area low, 39.43. I don't really do that one. But if you were to go and study volume profile, that's what they would teach you to do, is carry that one forward. The value area low, value area high. We're sitting out here on a daily chart. It's worth taking a moment to come out to this daily and kind of recognize the scope of what's been going on, right? We got these uh, this nice swing low when we're looking at the bigger picture. So linear regression line from the first of the year. You can see how we had these muted runs against against the linear regression line. Generally speaking, we get like a 1.5% move on one side, then we get it on the other, and it reciprocates back and forth. That's the general way that this works. Except when we came off of this low from early, say, mid-June, we didn't really get that reciprocation across. We didn't get that matching swing high. Then we had a really high low, and again, a muted return across the line. And now we're starting to get that swing over. So the market structure has changed. If you go back and look, when we set a low and we had one of those muted returns where we didn't really come across and set a good high, we ended up catching another low, a newer low. And again, we had a muted return. We ended up with equal lows. And then this run is all Fed, right? That was the March 16 Fed FOMC. We had that finally, the crossover, the Linrig, and a good sweeping move across those highs. We set the low down here in May. We had a reasonably decent crossover set the low in June. And since then, we started to have something different that we haven't had in a while. Started to have these higher highs or higher lows. We were getting these lower highs, so we were forming a compression, and it was in a lot of names that we were getting this signal. Now we've got that breakover happening. We're above the 50. We finally managed to get through that. And a lot of names right now have this exact setup. There's 2 pivot points on all of those names that we're going to jump through here in a few minutes. One of them is from late June, and the other one is from late May. Those 2 pivot points are on all of the FANG names, all of the monsters of tech. But where they're at in price is either well underneath those lines, in the middle of those 2 pivots, or way above those 2 pivots. So here with Apple, we've had that expansion, the breakout, it's over the 50, it's through the wedge. Microsoft, on the other hand, still stuck in the wedge, hasn't even made it outside yet. A lot of resistance at 270, and if it happens to actually get through there, then 275. Google, still stuck in the middle, hasn't made it through. A lot of resistance before you get to 120. Amazon's made it through the first pivot point, but it still has the second one, 125. We get through there, we still got the bottom of the gap at 130, and then the top of the gap at 140. Tesla made it through both of those pivot points in that single push yesterday. And 150, close to 150 is the bottom of that gap. Oh, 833, and then 865 is that gap coming up. Facebook made it over one of them, still has the other one to deal with at 200. Nice, solid, round number. NVIDIA made it through the first pivot point, still has the second one to deal with at 190. Costco's not one of the FANG names, not one of the monsters of tech. And as we get through the rest of the list, and most of these wouldn't be either. There is one chart that really stands out this year, T-Mobile. Now, it has been in a topping pattern at that 139 area, really failing to get through there. It tagged that 50 yesterday and miraculously held. It got back above it. Should have an earnings coming up. I think there was some news on AT&T that might actually give this market a little bit of love. Seems like, and I haven't read the article yet. I heard it this morning that AT&T is trying to defer some of its payments, meaning it can't meet its obligations. And if that's true, we're likely to see AT&T take a gut punch today. Intel made it above that 50. It's out of the box. It still has the May pivot point to get through. It's about halfway to its head and shoulders target. I no longer consider Netflix one of the monsters of tech, but it is a tech name and it does fit. It's just not big enough anymore for me to really consider it one of the monsters. Really, really low bar, low benchmark on its earnings. They only lost 1 million subscribers, which seemed to have pleased a lot of people. Had that nice little rally. We're through the first set of pivots. We're through both of those pivots, right? Even the May 30, we're above that. But the 245 is the top of the cup, and it's the bottom of the gap, right? So a significant level of resistance at 245. And the same setup with PayPal. We're above the 50, had a nice rally. We're above that pivot from June, but we still have the late May pivot to deal with. Like we often talk about, 80 to 85% of all of the market does what SPY is doing, right? SPY or the Qs, you can kind of take your pick. With SPY, we've got this gap top at 401.44. And the bottom of that gap, 394.88. We made it through there yesterday. Now I'm on a daily chart, so it's not showing what we've been doing in the pre-market. But if we were to come in now, look at it in the pre-market, we're still inside of yesterday's range, right? So right now we're looking for an inside day breakout. Since this low back on 7/14, we've only had one day, and it was that Apple news. That was the only day where we had that lower close. And every single one of these has been an expansion day. Right now, we're inside day. We're not out of yesterday's price. What we're going to be looking for before we try to short any of these names that are overextended. I know it may feel like, oh, well, they've ran so far, we got to short them now. Just hold off on that idea because a market can continue to run way longer than you thought it might. Right? And it's still just it's a bear market rally at this point. Nothing in the breath at all says that we're done with these lows. We've got an angled resistance coming up right around that $400 mark, maybe 41.5. And if we were on something like TrendSpider, I'm sure it would mark out a lot of these other angled resistance lines too. But you're not going to want to short this if we haven't had an inside day yet, right? Or if we haven't had one of these red days. We got to see this thing begin to consolidate, pause, or take a rejection and really give us a significant move to the downside. Maybe snap a lower trend line so that you get an angled support and look for it to break that at least something, right? Don't just use your gut or say, well, I feel like it's gone a long ways and that it needs to turn around. Nobody cares what you think and nobody cares about your feelings. You got to put your money on the line based on analysis, not just what you feel. So watch the resistance zones. Look for confluence in these names. It's not going to be one single name that flips, right? You're going to need everything to go. And what we've been seeing in the last few days is really, really strong flow. And the flow has been passing back and forth between financials and mega cap technology names. When one slows down or pauses, the other one rallies. And then when that one slows down, the other one rallies. Right. And through the day, it's like they make the run, they take a pause, then the next one makes a run and takes a pause. Yesterday afternoon, it kept looking like we were going to dump in the ES and the NASDAQ, right? We were pressing up against those highs in the later part of the day. We just kept coming up and failing to get through here. And yet, if you were watching something like the NYSE FANG, the monsters of tech, it told you don't try to short that. Now, the FANG affects the NASDAQ more than it does the ES. But if you were watching regional banking, finance, this thing got weak in the later part of the afternoon, so the S&P quit rallying. It quit rallying, sure, and it was stuck in this wedge, but it wasn't dumping because it still had support from the FANGs. This back and forth combo tag teaming punch, this is what we've talked about a lot when it comes to our risk on sectors, that we need finance or we need tech to keep a market rally going. And that if we can get both, we see a significant rally, right? One of those really great rally days. Well, we lost finance basically in the later part of the afternoon yesterday, but we still had tech, and tech was doing all of the heavy lifting. And then right towards the very end of the day, we got into power hour. Those bonds and that dollar closed at 3 o'clock, and we got finance back with a vengeance. And right at 3 o'clock, we started that rally up into the close in the ES. These two have been a phenomenal indicator in the last few days. If you're going to try to short the highs and buy the lows, you got to keep your eye on these two markets. And if we're going to dump the equities, go in and start selling the monsters of tech, we have to make sure that we've finally lost the FANGs and the KRE, right? The monsters of tech and the finance. Without it, those names, they're just going to continue to point to the upside. There's nothing slowing this thing down yet. So you want to start looking for a couple of early warnings that this is all starting to roll over. A failure to break out on the day, or even to open gapped up on the day, right? That would be a good start. We want to see inside day breakouts continue. We don't want these range days. Definitely don't want days like this where we're opening gapped down and then we rally back up and open gap down and rally back up. Days like this, same thing. All right, guys, it's my day to stream. I will be in the stocks and options channel at 9:15. Before we go, give you guys something to look on. There was a trade alert on a name I don't normally play. Oh, it's already off now. So here's a daily update for today. Summer months, it's a Friday, less liquidity, diminished bid ask size. Tech under pressure with Snap missing earnings and got their stock cut by 25%. Facebook fell 5%. So I put in the risk on symbols that I use, put them all into a watch list, sort them by their strength, and the strength is relative strength, right? So we're looking at things that compare to the rest of the index. So Visa is at a 9, T-Mobile's at a 10, Qualcomm. So a couple names to look at. I'll see you guys at 9:15.